Hi, I'm Pattu from freefincal. Let's discuss how different asset classes will be taxed after the budget 2024. This is a capital gains taxation guide. So all these tax rules are applicable for redemptions made on or after 23rd July 2024. There is no indexation benefit at all going forward. So like I said yesterday, there are now three types of mutual funds. One is equity mutual funds. These are funds holding 65% or more of domestic equity. And equity fund of funds are slightly differently defined. I'll talk about that below. So equity mutual funds, the new short-term capital gains tax is 20% for a holding of less than 1 year. The new long-term capital gains tax is 12.5%. Greater than 1 year, the first 1.25 lakh is tax free. Then there are debt funds, funds that hold 65% or more of debt or money market instruments, or debt fund of funds. These will be taxed as at slab rate irrespective of the holding period. Then there are all other funds. I'll give you examples below. So all other funds which do not fit into equity funds or debt funds, all other funds or fund of funds. So if you hold them for 2 years or lower, it is slab rate. More than 2 years, it is 12.5%. And also note that 1.25 lakh tax-free limit is a cumulative limit across all equity funds per financial year. So an equity fund of fund is one that is that invests in 90% of its assets in funds that invest 90% in domestic equity. So a fund of fund, let's say like there's a fund of fund, and that fund of funds portfolio has 90% of it in funds that invest in 90% equity. I hope that is clear. So only that's only possible if the underlying funds, that is the funds inside the fund of fund, hold 90% equity, and they have to be equity index ETFs or index funds. A debt fund of fund must hold 65% of funds that in turn invest at least 65% in debt and money market instruments. I think if I keep saying that again, I'll get confused. So you can look at the article and read it carefully. So a debt fund of fund, let me say this one last time. A debt fund of fund is one that should invest at least 65% in debt funds, and those debt funds should invest 65% in bonds. So that's how it's defined. And for debt funds, many people had this question in the last couple of days. If you have purchased units on or before March 31st, 2023 and sold them after July 23rd, 2024, you will be taxed at 12.5% without indexation if the duration of holding is greater than 2 years. If you have purchased after March 31st, 2023, it will always be at the slab rate. Now here are examples. Gold ETFs and gold funds. This will be at slab rate for STCG, that's less than 2 years, and 12.5% greater than 2 years. Overseas funds, STCG is slab rate, and after about 2 years, 12.5%. Equity oriented funds, less than 1 year, 20%, more than 1 year, 12.5%. Arbitrage funds, less than 1 year, 20%, more than 1 year, 12.5%. Equity savings funds, 20% less than 1 year, 12.5% greater than 1 year. Aggressive hybrid funds, less than 1 year, 20%, greater than 1 year, 12.5%. Balanced hybrid, slab rate, less than 2 years, more than 2 years, 12.5%. Dynamic asset allocation, it depends on the fund mandate. It could be debt oriented or equity oriented or balanced, we don't know that. Conservative hybrid, always at slab rate. Debt oriented funds, liquid funds, gilt funds, money market funds, corporate bond funds, PSU funds, etc., all at slab rate. Other asset classes, sovereign gold bond, it is tax free on maturity, but if you want to sell it mid-term, it is 20% tax less than 1 year and 12.5% tax greater than 1 year. Listed bonds, 20% less than 1 year, 12.5% greater than 1 year. Rights and InvITs, 20% less than 1 year, 12.5% greater than 1 year. Real estate, that is physical real estate, slab rate less than 2 years, 12.5%, greater than 2 years, no indexation, that's where the biggest loss is. Physical gold, slab rate less than 2 years, 12.5%, greater than 2 years. Unlisted stocks, slab rate less than 2 years, 12.5%, greater than 2 years. Overseas equity and bonds, that is direct purchase, slab rate less than 2 years and 12.5%, greater than 2 years. So that's about it. Check out all other articles on the part of as part of the FreeFincal 2024 budget coverage. Thank you. Bye bye.